think it's one of the selling opportunities of a lifetime because the economies, under normal circumstances, without the fear factor of the war, cannot support the price of oil. This is always a warning sign, David. When you get these kind of moves, this is very much like the 90s. You get these gigantic moves, everybody's happy, they're all over leveraged, and then suddenly something changes.
Is there anything right now that you would feel comfortable buying and holding for the remainder of the year without trading it? It's Wednesday, May 6th, and I'm very pleased to welcome to the show, Todd Bubba Horwitz, founder of BubbaTrading.com. You'll notice I am not in my usual space. I'm in Miami covering Consensus Miami, but I needed Todd's urgent update on the markets, which is why we're having him today. Welcome back to the show, Todd. Good to see you again. Good to see you.
David, always great to be with you. And it's funny, we're in the same state, just in different parts of it.
Yeah, usually we're in different time zones, and then we're both traveling. We end up in the same place. All right, let's get into the markets now. I'm going to flip over to my screen. I've been talking about Bitcoin all day because I'm at a Bitcoin conference or crypto conference, and it looks like Bitcoin and stocks are just riding the momentum up. Stocks at new all-time highs. Bitcoin retouching that $81,000 critical $80,000 mark, and the bull sentiment is back. What do you see right now? Is the bull sentiment here to stay? I'm going to flip over to an S&P 500 chart as you talk.
Well, I mean, for the equities, the bull sentiment is certainly here to stay for now. But again, we go back to what are the real issues behind the market, and can it be sustained? And certainly, we know we don't predict what the outcome is going to be over the next day or two or week or two, but there are many warning signs in these markets as we look at them. We have a very bad economy. I don't care that President Trump keeps touting how good the economy is. We are definitely, the K is getting smaller on the top end. We are seeing lack of jobs. We've seen housing prices starting to drop in certain areas of the country. There's a lot of warning signs that are being issued that if you choose to pay attention to them, then you would act accordingly. Now, that doesn't mean that you run out and sell everything and you say the markets are over. What it means is that you should be aware and you should be conscious. And really, I would be looking for a pretty substantial sell-off. Again, I'm still looking for that same 40 to 60%. But again, it's not going to be tomorrow. And again, until the markets give us an indication that they're going to be sold, we're looking at what I call a retail rally right now, David. The retail rally means that the big banks, JP Morgan, Goldman Sachs, Citibank, the big funds are not selling right now. They're allowing the markets to go up. And I remind you that when I was a floor trader, when the markets got a little bit too out of whack, the traders would walk out of the pit so that they would allow the markets to go where they were going to go and then come in and participate. I believe that's what you're seeing now in the equity market is the big money is waiting on the sidelines, looking more to sell than to buy right now.
We're going to get back.
There's a lot of evidence that says we're in pretty sad shape.
All right, we're going to get back to your economic forecast. And by the way, tune in and stay tuned for Todd's outlook on where the stock market's going to go. And we're going to get his outlook on gold as well, and Bitcoin and oil. But going back to your trading days, okay, so when you started off as a floor trader, there wasn't AI, there wasn't the internet. Now, a lot of the institutional trading are trading using bots. How has the landscape of trading and investing fundamentally shifted with technology since your early days on the floor?
Well, it's just shifted dramatically. I mean, first of all, there's no more floor traders, so there's no more true order flow or paper flow that a guy like me could read off of. You have a lot of bots trading, signs and pushing money back and forth. But overall, they're actually reading the fundamental and the technical parts of the market. They have eliminated a lot of the independent traders that are out there. But of course, it still takes market participants. We can have all the technology we want. You still have to worry about the individual, the trader, the investor, the person on the street who's going to push that button to sell when they start to panic. Because, just because it's trading off of a bot or off of AI doesn't mean it's going to go directional in the same direction. We still have to have a price discovery mechanism. We're still going to have panics that will force markets much lower. We're going to have reasons, and AI might be the start of it. They may start to sell off. But the real sell-off will not come until you get panic from the market participants and the people that are holding the equities or the stocks or the futures, whatever they're holding. That's when the panic will set in, when they participate. So AI helps, and it certainly helps with a lot of the technology of buying and selling, but it's still going to take a buyer and a seller to meet and make a decision.
I was at the conference. I asked somebody, hey, in the future, everybody's going to have the ability to create his own trading bot using AI if they want. How does that how do institutional investors still retain an edge? And the answer to this question by this gentleman was, hey, look, whatever you think you have at home, Citadel and Jane Street have on steroids, and they've had it longer than you. So they're always going to retain an edge. And that made me think, okay, if the big guys will always have a technological and I guess experiential edge, then how do the little guys, the traders from the retail crowd, even, what are we doing here, Bob? Bubba, what, why
Well,
not just how do we just buy the index fund and go to sleep?
Well, I
No.
mean that. Listen, I've said many times before. Even though I have a negative feel for the market right now,
Mhm.
I'm still long the market, David.
Yeah.
I'm not. I think that whether you buy index funds or whether you buy good companies, I think the key secret to any investor is to buy either the index funds or good companies. Apple, Nvidia, the companies that actually make money, because those are going to grow, and they have proven over time through industrial revolutions, through technical revolutions, that they continue to grow at an average rate of 8.5% year over year. So that technology, we're never going to catch up with JP Morgan or Goldman Sachs, the individual. It's no different than Bitcoin mining. When China was selling the software to mine Bitcoin, you don't think they had the better software that they were mining themselves in their own warehouses there? So we're never going to compete, but we're not trying to compete
Uh-huh.
with JP Morgan. What we're trying to do is make money, whether you're day trading or you're investing. And most people are investing, they're not day trading, looking to put money away and having your money grow and grow faster than the rate of inflation, so that when you decide that it's time to retire, that you've accumulated enough assets so that you can live comfortably the rest of your life.
Spirit Airlines ceased operations over the weekend. What one of the latest casualties from the higher oil price? What is the next industry or subsector to fall from oil prices staying high, Bubba?
Well, oil is about 80% of our economy. Okay, think about it, from your driving your car to the delivery of goods to the making of plastics. I think the next big will be the autos, because the auto industry is already struggling. Now, who's going to have the money to go out and buy a new car? Okay. And who's going to be able to afford to put gas in that car? We have a glut. The sad thing, David, is in the United States, there is a glut of oil. Okay. We have more oil than we know what to do with it, and we're exporting record numbers. And we still have a glut because it's telling you that there's not enough demand. Okay. So it's going to hurt the farming industry. It's going to continue to hike inflation, which is going to hurt the individual. These are all problems that, again, these are the warning signs that are out there. Not to mention that besides oil, AI is replacing a lot of jobs as well. Okay. And now you have Meta creating robots to do some household work, which will destroy another bit. So we're really doing, with all of this technology and with
Yeah.
the high price of oil, is we're eliminating a lot of jobs because there's not a need to have those people working.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, there's an entire industry built around collecting and selling your personal info. Data brokers collect information such as your name, address, and phone number, then package and sell it to third parties. Delete Me is designed to help reduce that exposure. It only takes a few minutes to set up, and they handle all the work in the background. They identify where your data appears, verify those listings, and submit removal requests to hundreds of broker sites. They also keep monitoring, since these listings can come back over time. I've been using Delete Me for over 2 years now, and they have reviewed over 325 listings of my information. This saved me over 12 hours of searching and reviewing it myself. The reports show exactly what was found and what was removed, which makes the process transparent. Scan the QR code on the screen here, or go to joindeleteme.com/David Lin, link in the description down below, and use code David Lin for 20% off. Now back to the video.
Speaking of oil, I had you on before a couple of weeks ago. You said that there was a great short opportunity around $100 a barrel. We're at 92 now. How do you feel?
I think we're going a lot lower. I mean, certainly, listen, right now we're trading specifically off the news in Iran. When there's a little bit of peace or a little bit of indication, oil collapses, as you saw. Now, oil was down today, though, at one time about $13 before coming back. Any good news towards oil, anything with the straits that it's going to be open, oil is going to continue to fall. I would expect to see oil if everything works out properly, I would expect to see oil back in the 60s before the year is out. Okay. That's what shows up in the chart. That's what shows up in the formation going out to, because in December oil is under $70 a barrel right
Okay.
now. So I would expect now again, obviously, they go back at war tomorrow again and all deals are off. You'll
Okay.
probably see a spike in oil, but I think oil is still, as I said when it was 120, and I said when it was 110, and I said it's 100. I think it's one of the selling opportunities of a lifetime because the economies under normal circumstances, without the fear factor of the war, cannot support the price of oil.
So if oil falls back to 60, does that mean a normalization of the economy? The economy goes back to normal. The Fed starts cutting again.
The Fed's not going to cut until inflation falls. And of course, Warsh, the new Fed chair,
Uh-huh.
he realizes this. Now, I don't think President Trump's going to be totally thrilled with Warsh, even though that's his guy, but he's a little bit more of a hawk than he is a dove. And I think he wants to hike rates a little bit further because inflation is dramatically out of control, especially with the high price of oil. Rates should not be cut by the Federal Reserve. Rates should be determined by the free market. Okay, this is one of the flaws of the Federal Reserve. Interest rates should be what a buyer is willing to pay and what a seller is willing to sell it at. And we do not benefit from lower rates at the Fed funds rate. Only the banks benefit at the Fed funds rates. You have not seen mortgage rates drop very much considering the amount of drop in the Fed funds rate. So the only benefactor of the Fed funds and the Fed cutting rates is the banks, not the
All right.
individual.
And some other stock news. Intel soared this week, 13% on reported Apple chip talks, hits new all-time high. This is the chart for people who want to see it. It soared since the beginning of April, 160%. It was kind of a laggard up until now, and then it just ran up all the way. Now, we don't have to get into the specifics of the stock, but this is just one example of something that really moves up anytime there's good news in the market. What does that mean for you?
Well, it means that you're seeing what I would call a little bit of FOMO, a little bit of a chase. I mean, just look what happened to Micron overnight. Micron was up 20% overnight. Okay, just over last night over earnings. That was a total short squeeze, a total breakout to the upside. Look, again, this market's going to go. You're going to have this FOMO until you don't have it anymore. But this is always a warning sign, David. When you get these kind of moves, this is very much like the 90s. You get these gigantic moves, everybody's happy, they're all over leveraged, and then suddenly something changes, and really nothing changed, but the buyers have run out and the sellers have shown back up into the market. And these kind of moves should be sold anyways. No stock, no commodity, nothing can sustain that type of parabolic movement when you see it. And certainly for me, I'm looking to sell it right now because again, not because there's anything wrong with it, but because of the parabolic movement.
Wait a minute. I know it went parabolic, but nobody knows where it's going next tomorrow, right? So you look at the momentum. Wouldn't you want to stay on the side of momentum and buy in right now instead of sell?
In this particular case, in this particular chart, no, I'm 100% a seller, and I've already got a small short position that I put on today in Micron, and I will add to it. Again, the rate of change, the rate that it is moving up cannot be sustained. There's not enough money to sustain a move like that. It's put up a chart of silver, put up a chart of crude, put up a chart of gold, put up any one of those, you see the same action. Okay. And I expect the same action in Micron and Intel and all the rest. This is, again, put a Palantir. I give you a list of 100 of them that you can look at and you'll see the net result. Okay. They all end up doing the same thing. They get too far overextended and all the buyers are gone. It's, you know what, it's no different if for those who know what a bear market is or have seen a short squeeze where you get that vicious rally from a market that looks like it's going down forever. This is the same thing. It's just turn the chart upside down. You will see the same action. These moves are unsustainable very much as they were in 87 and 01 and of course in 08.
Yeah. Okay. So let's say I'm somebody who doesn't agree with you. Let's say, for example, I think Intel is going to go back up or continue going up for whatever reason. I think Bubba's wrong. I'm going to buy into it now, but I'm not 100% sure because nobody's 100% sure. How do I hedge my position? Tell us about hedging.
Well, you deal with options. I mean, if you want to listen, if I teach somebody hedging, I tell them all the time, buy whenever you want. It doesn't matter because now I can use options and use what we call a 1x2 back spread against it, I have unlimited upside, but I know to a mathematical certainty, for example, in Intel, I would be risking 3% to the downside. Okay. And certainly accumulating more shares as it would fall by protecting it, but yet still have the benefit of going to the upside with very little exposure, but having a cap of knowing that 3% of the downside is my risk. So certainly you could buy Intel right now. You could hedge it right now and know that your cap risk is 3% to the downside. And if you use the hedging model properly, if it continues to fall, you continue to use the credit or the coverage to buy more stock. Because again, Intel should probably fall, I would say 30 or 40% at some point here. But again, 10 years from now, it'll probably be higher than it is right now.
So when you talk about using options to hedge, are you talking about buying puts or calls, or are you talking about selling options?
I'm talking about creating a position, a combination of selling a put option and buying two put options for every 100 shares of that stock or that index. So you're net short 100 shares, but you're covering up for some of the time decay in the price by selling an option so that you can reduce the overall cost of hedging that portfolio.
There's a lot of volatility right now in the market. Probably a good time for an options trader, isn't that?
Yeah, listen, it's always a good time for a trader if you're patient enough to wait for the moves and don't get too trigger happy with your computer. That's one of the things that have always caused a lot of problems in the markets as well. People get a little bit too trigger happy
Yeah.
with the mouse.
All right, let's go back to the Intel chart, and I'm going somewhere with this. You said it has the potential to, hold on, let me just pull this up. It has the potential to correct 30%. Well, it looks a lot like the stock market overall. This is the S&P 500, and let me just overlay this with the Intel stock. Kind of familiar, right?
Yes, 100%.
I,
Biggest rally in history in the period of time we've had. And certainly I'm not going to tell you it's going down tomorrow, but certainly I'm looking for a place and a reason to sell it.
look at this. It's
Okay.
up 15% since April. I mean,
Yep.
what is a market euphoric about? There's still a war going on. The Strait of Hormuz is still closed, and oil's still near $100. And like the economy, like you said, is still lagging. So why is this happening?
Well, this is my opening statement. My opening theory is that the big participants, the big funds, are not participating right now, and of course, markets are predisposed to go higher because you have pension funds, you have 401ks, and you have IRA money that flows in every single day on the buy side. They don't take the sell side; they're only on the buy side. Okay, so this rally, if you look at the lack of volume and the lack of participation, looks to be a rally of the pension funds and the 401ks, and everybody's joyful and chasing it up. But I believe that once you see the participation from the banks and from the others, I think they'll be on the sell side. And I think they're allowing this market to run up until they decide that it's gone far enough, because any professional knows that the sustainability of this rally, the way it's going right now, is virtually
Would you be a
impossible.
buyer of the software sector right now? Let's say IGV, for example. I just pulled that chart up. It's down something like 25% of the year. AI's wiped out a lot of the AI has repriced anything that is built on code, says the media. And that's exactly what's happened. Does that look like a good buying opportunity
I
to
would
you?
be a buyer of I'd be a buyer of something like this. If it would break out a little bit up out of that, it looks like it's in a little bit of a consolidation. If it would break to the
Hmm.
upside, I would be certainly interested in being a buyer there. Looks like it's made its bottom. It looks like it's making its retracement back to the top. A lot of these lower end software companies, a lot of these lower and even a lot of these lower end AI stocks that are underfinanced got hammered throughout the last sell off and are now starting to come back. So certainly, these again, the key for me is, if I'm trading it, it's one thing, but if I'm investing in it, is it profitable? Do they make money? If they don't make money, they're not profitable. I'm probably not a buyer.
Okay, let's switch over to gold now. Another consolidating pattern. Tell us what you see here.
I think gold has made a bottom. I thought that blow off bottom back a couple of weeks ago at 4,100 was it. I think you look to be a buyer of gold on all dips, and I think that we're probably going to see this year 6,000 in gold before the year is over. I would certainly not be at all concerned about owning gold. I think it continues to probably consolidate here a little bit. And I think once we get back over 4,800, 4,900, I think we'll be off to the races again.
How important is momentum to you? So let's say it goes to $6,000 in the span of 2 years versus just a few months. Would you trade the price differently at $6,000 in either scenario?
Well, yeah, if it went to 6,000 in 2 months, I would do what I told you when it was up at 5,500. I'd be a seller. Okay. If it goes up too
Okay.
fast, that means that it's being driven by momentum, and we all know that eventually the momentum dries up and falls. Okay. If it grinds up, which is what I expect it to do,
Mhm.
if it grinds up, then I'm going to be much more bullish and be looking for opportunities. The minute the market makes, it's called a blow-off
Yeah.
pattern. It's the pattern you see back a few months ago to the upside. It's the pattern that created 4,100 3 weeks ago to the downside. Those patterns are meant to be bought or sold. When you think that it can't go any lower, that's when you want to be the buyer. Okay. When you see that dramatic move down and it looks like it's over, that's when you want to be a buyer. When it goes straight up in the air, like you see, that's when you want to be a seller. Again, it takes a lot of mental fortitude to fall into that, but there are positions that you can create using the option market to start out with so that you can limit your risk while you're making these types of trades.
Okay, so how do you decide as a commodities trader for when you're trading commodities, how do you decide the exit strategy? People can assign all sorts of target valuations for stocks, for example. You can do a discounted cash flow and assign a value once a stock hits a certain value, you think, okay, it's no longer cheap, time to sell. You can't do that with gold or wheat or cattle or anything like that. There's no cash flow. So how do you decide if 6,000 is expensive or 5,500, for example?
I think what you do is if you learn to read the chart, the chart is like a map,
Mhm.
okay? And when a market is making higher highs and higher lows, that indicates that the trend is on the upside. When the market is making double tops and double bottoms, that means the market's in consolidation. Of course, when it's making lower highs and lower lows, it means that it's in a downtrend. Right now, it's in a consolidation pattern, and if you look at it's kind of forming a point, almost a triangle or a flag or a pennant that's telling you it's going to break one way or the other. Now, again, if it gets too far ahead, if we go up too fast, then there's going to be some retracement. If it grinds higher, if you go back and see the big peaks, if you go back to the beginning of your chart, you see that peak and then the sell-off.
Yeah.
Okay, you see when they get too fast, they come back and revert back to the mean. A good gauge to watch is for anybody is to pick a moving average. Okay, whether it be the 20-day, 50-day, 200-day. I mean, the markets themselves base off the 200-day moving average. The old theory, the old Dow theory is be long above the 200-day moving average and be short below it. But you can pick any moving average you want, and you can say, okay, I want to buy gold. It's above the 50-day moving average. I'm going to hold gold until it breaks below that 50-day moving average and then look for a place to re-enter.
Is there anything right now that you would feel comfortable buying and holding for the remainder of the year without trading it and be comfortable?
I'd buy gold, silver, and platinum without
Okay.
even thinking about it. I'd buy Bitcoin or Bitcoin related stocks here. I know it just recently come from a low
Yeah.
and popped back up. Uh, I think there's, again, as far as some of the equities out there, listen, I mean, I don't think you'll get hurt if you bought, Nvidia or Apple, but I wouldn't be as comfortable wanting to hold those for the rest of the year based on what my expectations of the market are. I'd be extremely comfortable owning the grain markets right here. Uh, I'd be comfortable owning hogs. Right. Well, I'm gonna take that back because hogs are after the barbecue season. No, no, not so good. But grains, I'd be very happy holding throughout all this.
Yeah.
From an equity standpoint, I'd be comfortable. Not thrilled, but I'd be comfortable with any of the ETFs in general because they're going to have less volatility because they're obviously a group of 500 stocks or a group of 100 stocks. But from a straight out, to answer your question, gold, silver, platinum, grain markets, I'd be happy to hold for the rest of the year, and I'd happy to be happy to be short crude the rest of the year.
Uh, Going back to Bitcoin, why do you like Bitcoin right now? Look at this line that I drew on the chart here. It seems to be breaking above a resistance level, a trend line rather, but I'll let you answer why you like it.
Well, I mean, look at where it made its bottom about a month ago. That straight spike down to the bottom where you started your line at. Okay,
Yeah.
back another. There you go. Okay, so that was a blow off bottom. Then it went into a consolidation pattern. Look at how it made a series of double bottoms and held and could not break out. Then finally, about 2 weeks ago, it broke out to the upside. Okay. And that's what I'm looking at. So to me, that looks fairly bullish as it breaks out of consolidation. Now, I would love to see a little bit of a pullback, probably to, let's say, 78,000 or 79,000, but certainly I'm comfortable buying it here, and did buy some Bitcoin stocks and some Ethereum stocks today, as a matter of fact.
All right, I want to finish off with some just trading philosophy questions. How do you define risk? What is risk for you?
Risk is what you can afford, and risk is based on time frame that you're trading. I mean, if you're trading over the long, if you're investing, then your risk is a whole bunch different, and you should not be investing with capital that you need. Investing capital should be money that you can put away and sustain through a massive meltdown in the market and not panic. Now, most people have trouble doing that. From a shorter time frame, your risk is determined. I mean, if I'm trading on a 4 minute time frame, sometimes I do, I'm willing to take a couple $100 worth of risk. If I'm trading in a daily time frame, I'm willing to take a couple $1,000s worth of risk. So really, everybody's got to define their own risk parameters, but you should always know that your ability to make money should be bigger than the amount of risk that you're willing to take. So you have to be able to see that in that market that you're buying, and you cannot use the leverage that they give you. Just because you can buy X amount of futures or X amount of options doesn't mean that you should buy them, because leverage is great when it's going in your favor, but extremely painful when it's not. And too many people have a tendency to get over leveraged in markets trying to get the big score. And I'm going to say this: trading is a grind of earning the right to trade bigger size.
At what point do you stop trading and start gambling?
Well, that's what a lot of people do. I always trade and I don't gamble because, again, this is trading, like many games, are a probability model. And if you're playing the probabilities, and again, the probability would be there's a higher probability that Intel, which you showed, is going to go down than continue to go higher. Okay, now maybe I'll be wrong, but I will take my chance, and I will build a position that will build an X amount of risk. And if the risk hits, then I'll take the loss and move on. The biggest key to gambling is that you have to be willing to take the loss and not bet more than you can afford.
Okay.
You have to be able to have a loss and be able to feed your family, pay your bills, pay your mortgage.
For sure. Okay. Thanks so much, Bubba. Appreciate your time. Where can we learn more from you, follow you?
You can go to go.bubbatrading.com, new moniker, go.bubbatrading.com. And also, as I always like to do for your listeners who love my books, they can have my books if they'd like. They just got to email me at bubba@bubbatrading.com. I'll send you the PDF file of 2 books I've written on options.
Okay. Excellent. We'll put the link down below. So go to, was it go.bubbatrading.com. Go.bubbatrading.com. All right. Thank you, Bubba. Have a good night.
Go, go, go.
Go, go,
Thanks,
go.
David. Have a great one. Good luck, man. Thank you.
Thank you. And thank you for watching. Don't forget to like, subscribe.